So what are your thoughts on gold into Yellen's testimony?
I think you have to wait and watch, see what she says, and trade it accordingly. The signal says that it's dollar up. So, again, if she were to say take the rate hike off the table in June, that's when I think gold can stabilize. But for now, Darius, it's picking up this like 180-day correlation, and then you kind of move backwards from there. Inversely correlated, I put that in the early look yesterday. It's nowhere near oil or copper or the CRB index. But, longer term, the dollar really does matter to gold. And if you ignored that for the prior 6 months before gold bounced, and again, that was mainly because the dollar stopped going up at an accelerating rate, you really respect the force majeure that could be U.S. dollar up that is negative for gold.
Cool. And then moving on, can you summarize the Bayesian versus frequentist debate as it pertains to the labor market?
Sure. We get that question a lot. Actually, it would lead to a series of questions. It's the slide that shows the long-term data series for jobless claims. What we do is we go back to the 1980s and we show that the top end of the range in jobless claims is 600,000. We're talking about a 6-month rolling average. The low end of the range is around 300,000. So what we're showing people is that how long in months it has stayed at 300,000. And a frequentist in probability theory would observe those periods and say, it happened that time, and this time, therefore it should happen the next time. So that's, it's not an irrelevant probability theory, it's just got risks. Whereas the Bayesian inference process I like to overlay it on top of a frequency process, because the frequency process is just simply accounting for history. But a Bayesian process is wiggling and moving and really being, changing your mind as the data changes on the front end of that. So looking at the data point specifically, which is jobless claims, and looking at the week to week and the trending rolling average and things of that nature. So again, one's not perfect, the other one's not perfect. I don't think there's anything that's perfect. I think if you're looking for a super secret certainty model in anything macro, you're looking for the wrong thing, because everything I've taught you has to do with embracing uncertainty.
Indeed. We'll wrap it up there, folks. Thanks for joining us this morning. Catch you back here tomorrow, same time. Have a great day out there.